likes taking stop losses. But the reality is stop losses can be a very powerful tool and should be an essential part of any trade strategy. At BGS 20 strategy, every single trade, we set up target and also stop losses. Ideally, we want to do at least 3 for 1. So 3 times winning for 1 time stop losses. Normally our stop losses are 3 to 12%. Sometimes we call that a stop loss, but we do cut our trades earlier at small loss, so it doesn't even reach the stop loss if we think any of the multidimensional facts, such as macroeconomic or any fundamental change happens during the time which we are holding that particular stock. In this video, I will share 3 stop losses that we have recently taken that I believe still could be a very good buy for the second half of 2025. Let's have a look. My name is Les and I'm Chief Analyst of BG Trading Australia. This video has been recorded on 2nd of June 2025. I would like to remind you this is not a financial advice, it's just as from BG Trading, sharing with you how we apply our strategies to chase 20 to 40% profit within 1 to 3 months. If you like our videos, please subscribe the channel right now. And also like to invite you to become a member of our free Facebook community and Facebook page, which will share a lot of great quality content. Details at the description below. And finally, I'd like to remind you that we are running end of financial year offer. To anyone that sign up for 12 months or 24 months membership, will be adding extra 6 months and 12 months free of charge respectively on your membership. So if you like, also we'll be leaving the end of financial year offer 2025 details at the description below. Now let's jump straight into what this video is all about. So the first stock that we have taken a stop loss recently was Kogan, KGN. Although Kogan has been increasing its revenue, the last quarter report, they announced a 35% decline on EBITDA. And then obviously the market has sold off and we decided to sell really short this particular position because we thought with all this very unstable macroeconomic environment, although Kogan is a local domestic company, which it's kind of a giving or taking immune to Trump's tariff, we thought that could be a further sell-off. Then we decided just to cut our position and look into a new entry point potentially down in the road. This is not the stock I will be analyzing, but I just wanted to show you here. In this stock, our stop loss was about $4.40. We decided to sell Kogan, right? And then the stock is now trading about 9.5% below that stop loss. It's not much. Our stop loss was about 3% only. And also want to highlight this, where Kogan is a stock that we have been trading on a consistent basis. And in our first trade this year, we actually locked 10%. And the second trade, we did lock 13%. It's not within the threshold, but we still, if we see an opportunity and very high volatility, we do go for small trades as well. Overall, Kogan is giving or taking 20% up from all the trades, but this last trade we did take stop loss just because the quarter report came up with decline on EBITDA, and we knew a sell-off would happen. But if we analyzing from But if we analyze Kogan from the technical aspect, you can see that Kogan is pretty much still kind of trading in downtrend. But if you look at the RSI, it's kind of forming a sideways moving pattern. And as you can see, it is trading at a multi-year support level, right? Whether will be a breakout of this support level is still yet to be confirmed. Would I be buying Kogan? Not. I think we might see a breakout of this multi-year support level towards COVID's level, where Kogan was trading just around $3. Well, hard to actually see that, but any price below the last stop loss would be an effective entry for the purposes of taking stop losses, not only to protect capital, but also to be able to position again with a lower cost and having the same number of shares on that particular trade. Just the chart formation to me looks like Kogan could well move sideways, right? It failed to break the long-term moving average, so it's still in a bearish territory. But as soon as it breaks through this pink line SMA 250, then Kogan would technically start moving into a bullish territory, which is exactly where we was expecting when we bought Kogan last around $4.50. We're expecting this breakout to happen, and that didn't happen. That's fine, and mostly caused by a weak quarter result. I wanted to remind as well, all those retail stocks, they are struggling, but it's still showing a strong revenue increase, like Kogan, for example. They just came out of one of the worst quarters of the year. In fact, the worst quarter of the year for most of retail stocks, just post Christmas and New Year's. And then the first quarter of any calendar year tends to be fairly weak for those particular stock. So I'll be looking at, if you're looking to buy a Kogan now at multi-year resistance level, just again, I would be setting up another stop loss right under this level here, potentially, because it is at the support level. You can set up a very tight stop loss and chase a potential bounce back of this sort of range right there. Okay, so which would allow 20%. But I wanted to say this, since we have this negative update, I'm not interested to go with Kogan right now unless it becomes significantly cheap and offering extraordinary fundamental value, which is not this case just yet, right? And I'm talking about maybe if for any reason, I don't think it's going to happen, but Kogan still reporting similarly, but the stock price goes down to $1.50, for example, which is another 50%. Actually, it will be 60% decline from here. I don't think that's going to happen. Okay, maybe the worst case will be $3, right? But there's a strong chance, according to the RSI formation here, a strong chance that we might see a bounce straight up from here anyway. But still, there's not enough range for us to attempt buying Kogan again, especially because the fundamental update was not that great, right? So another one, and this was our biggest loss for this financial year, Sitai Limited, CTT. You know how I come up in the videos, and many of the stocks that we cover in this channel, they actually reach their proposed targets, but some of them obviously failed, and I'm very happy to come back here and review each one that has failed, which I'm doing right now for you, and potentially look into is there another opportunity to buy Sitai Limited. So that's what I'm going to talk about right now. So why this was our biggest loss. And then when I'm talking about biggest loss for this particular stock is we actually lost about $27,000 for this particular stock only in January and February when Sitai has reached our stop loss of 105, right? We first bought at 132 and then the stock came down and that was just before this whole tariff madness, sort of speaking. So we bought 132 and then when stock went down, we decided to add a little bit more, something that we normally don't do it, but we thought Sitai would still report growth on their quarter, and that didn't happen. They came up with a very flat growth, and obviously we had to take stop loss because we knew the fundamental impact on the share price was imminent, right? But why I'm bringing this here? Look, even though we took $27,000 loss on this particular stock position, as you can see here, all the green positions are profitable, and we still about $133,000 up in this, probably a little bit less today because this is a last week update, but we still $133,000 profit, 50% profit on our portfolio so far. If the market doesn't crash, we're going to end this year around 50% profit. Hopefully it doesn't crash, and maybe we even have a little rally to help to boost a little bit more our numbers. And these are the stocks that we are trading, not just ourselves, but with our VIP members as well, right? So anyway, this was the setup, just so you understand. So when in January and February, that was going to be hard to control here because the video. So yeah, we had this second bounce. That's when we decided to buy, because at the time, looking at all the technical formation, you could tell the RSI was start to show some bullish divergence there, and then the stock price also. I just want to show you the bullish divergence that we saw at that time. Pretty much this, right? Obviously, it was broken right there, where just a little bit after we took the stop loss. But then the key reason we decided to sell was once again because the update, the fundamental update, was fairly negative, and Sitai was highly affected by the tariffs as well. I mean, psychologically affected by the tariffs. And then obviously the market freaked out that Sitai would be directly affected by the tariffs. Obviously, a lot of the imports in US comes from Europe, and US has put a 50% tariff. All this downturn right there was generated by the uncertainty of the market to actually know how much those tariffs would actually impact Sitai operations, right? It's still going to be unclear. Obviously, the market is waiting for some update, right? So then it was sold, and then Sitai has fallen about 64% from that level, which we decided to buy it again, just to open these up candles right there. So you see this really impulsive rally right there. So we wait a little bit, and then we decide to buy just to see how it goes, about 53 cents, and then again it fell on our stop loss of 47 cents. There was a very small loss on this one, but still we had to take stop loss again. I believe this stock still offering extraordinary value at the current price, especially under 40 cents, right? It is a risky trade. It's a highly shorted stock currently. I think 9.5% of the total shares issued by this company is on the hands of short traders. So just gotta be careful, right? But one thing is interesting now is that Sitai Limited, the stock price is trading at multi-year support level. And why this is so important? So if you go on a monthly chart right there, you can see what happened back in 2022. Sitai went down from $4.70 all the way down to 36 cents. And then it's happening pretty much the same right there. But now Sitai has reported to be holding about $76 million cash with a market capitalization of $150 million. Still growing revenue. Not as much in this quarter because, again, it's the worst quarter of the year. But we could see, if we see a revenue growing further in this quarter as we speak, then a bounce could be very likely. We may even have a huge short squeeze right there, right? So that's yet to be seen. So anyone trading, again, make sure there is a stop loss, there is a target in place. And but it's nothing wrong with trading stock that are showing extremely rare fundamental value at the current price, right? And we might even have a small bullish divergence here on the RSI if the share price bounces from these 38 cents level into 45, 50 cents once again, which I probably would be expecting since Sitai is trading at a multi-year support level. So this is again, and I've been wrong before, right? But it looks like everything has been de-risked now. We are only relying on this quarter update and the full year result to not be too bad. I'm expecting a very small net loss, or potentially even a break even for Sitai from obviously a profitable year before. So that's why the share price has fallen so much as well. So I'll let you decide whether you should be buying Sitai Limited at the current levels. But remember, you want to buy when it's cheap, right? And this company it's fundamentally pretty strong for $150 million market cap company. Could be even be a takeover target at this price, in my opinion. And we're seeing many WAC stocks like Appen going just as low as this sort of level, with far worse fundamentals, and then going all the way up to $2. Again, just as a result of a market hype. Obviously, and Novonix again as well, another stock that was trading at 38 cents, something like this, and then went up to 55 cents recently. So there's a good rally there. Again, the fact that we took stop loss now at $1.05 allow us to save our capital from crashing 64%, for losing 64% of overall capital. Then this loss of $29,000, that's because we had a really big position around $1. But this loss of $29 could have been consolidated into $65,000, which thanks to our strategy, BGS 20 strategy, we decide to not go emotional and then just put in the freezer for the time being, right? And then the last one is Flyander. Flyander FLT, we bought at $16.50 in January, and we ended up taking stop loss at $16.20. There was a very tight loss, but the reason we did is, again, related to a fundamental outlook for Flyander based on the half a year result, which the company has missed the guidance, and even downgraded the guidance from previously projected, which obviously made, we knew by the time that was released in the market, that's when we had this huge candle there, and then we decided just to close our position early in the day as soon as the report was released, because we thought it would go down. We didn't know how far it would go down, but in this case, it went down 27% from the price that we sold. So we saved ourselves here 27%, right? And very recently, we saw a potential break from this downtrend into a consolidation level right there. In fact, I just put an analysis for Flyander. I think I'm going to do a dedicated video for Flyander just so you understand why I think Flyander could be a very good position into a relatively lower risk stock, a large cap in comparison to small and mid-sized caps that we normally cover in this channel, and still potentially give even 60-80% within the next 6 to 12 months, which is extraordinary gain if that happens. Obviously, we are relying on what this quarter report and the full year report will be. If it's in line with the expectation, then I would say this is a green tick stock to buy, especially with multiple interest rates cut and potentially US cutting interest rates further as well, right? So expecting a double bottom right there, potentially Flyander reaching $12 once again, if not breaking towards this long-term support level right there, which is pretty much sitting around $10. So that's what is right now. The long-term support level is sitting around $10, just under here. This is a wide range, guys. It's not just a number, it's a range between $9 to $10. And I show you why. You just go to a weekly chart right there, and then you can see that this range, this long-term support level was first reached after the COVID crash right there. So we could we see that happen? Well, I gotta tell you this, buybacks and Flyander in far better position than it was in 2020. I would say we most likely won't see that happening, but we never know. We never know. As long as there are short sellers out there, the stock price can go far lower than we even anticipate. So the ultimate buying for Flyander, in my opinion, based on the chart formation, based on a multi-year support level, is between $9 to $10. However, I believe that we don't see that happening, right? We might only see Flyander reaching $12 again and bouncing back, especially if this quarter report is it's better than expected, right? So I'll put a full analysis in the next video for Flyander if you're interested. And but I think for a lower risk stock at the current level, this is an opportunity to buy a large cap at technically discounted price. Not much of a brainer. Thank you very much, guys. I hope that was valuable. Again, not financial advice, just showing how we take stop losses for potential position ourselves again at the much lower prices into stocks that we believe that could be a potential buying opportunity. And then if those stocks come back to our original stop loss level, then we might even making 30, 40, 50% back, right?